Welcome to step 3. Now that we've developed a cash flow engine, and now that you have positive money left at the end of the month in order to use, we're now going to talk about applying that cash flow and using that engine to eliminate your debt and then move on from there into acquiring income-producing assets for your family. So this first example, there's a triangle here of credit card balances. We have 4 credit card balances here that add up to $23,000 of debt. And in this example, remember under step 2, we said 3% of the current balance we need to fix and not reduce it as we pay them off, but fix. And if 3% of $23,000 is $690. So let's say we've developed $690 toward our debt. So we take this $690 and we pay the monthly minimum payments on all of these accounts except for the smallest balance. Now the larger $10,000 balance account would be $200, the $7,000 balance would be $140, the $4,000 would be $80, but the smallest balance, we're going to pay all of the left from the $690, the $270, right to that smallest balance and then try to apply against the smallest balance first. Now by doing this $270 toward a $2,000 balance is going to clear this debt off very quickly. If you just assumed a medium interest rate, in about 13 months, 14 months, this debt would be satisfied. So I know 13 months sounds like a long time, but we're going to completely get out of debt in 5 years, so really that's not so long. And the reason why we picked the smaller amount, regardless of the interest rate, is that we do need that encouragement to give us the acceleration and give us the passion to get rid of those larger debts. So in any event, very quickly, that debt is going to be paid off. Once that debt is paid off, you can see in the next slide that we no longer have to make that $270 payment again. So now we link that $270 with the $80 on the $4,000 balance. And now instead of paying $80 on the $4,000 balance, we have $350 to pay towards the $4,000 balance. Once again, we hold the minimum payments, and the minimum payments on the other 2 accounts are actually going to go down. That 140 is going to probably drop to 136, the 200 is probably going to drop to 180, 185. We suggest you just keep it right at 140 and 200. Keep it right at those fixed numbers and just ignore that monthly minimum payment. We've got to get out of that mind trap of thinking that that really means anything other than to make the credit card companies rich. So now we have $350 to apply to the $4,000 balance. Once again, in about a year plus a month or 2, in a few months, that is going to be totally wiped out. Now what you'll find, remember the concept with the attitude, moving into the action and the habit. Once you start getting into the habit of this, it's going to become a game and it's going to be fun, and you're actually going to develop additional monies that you can put into this, and it's going to actually accelerate your way out of debt even faster than you might imagine. But in any event, once the $4,000 balance is cleared, then all of a sudden we no longer have the $350 per month to go towards that. So now we add the $350 with the $140 we were paying on the $7,000 balance, and now we have $490 to pay towards the $7,000 balance. Once again, we apply that $490 every month. Now this time it's a little bit bigger balance and it may take 15 or 16 months this time, but you basically just need to apply that pressure over time and continue with the $490 until that one's eradicated. Once that one's eradicated, then you take the $490, put it with the $200, and now you have $690 to apply towards the $10,000 balance. And once again with the $690 going towards the $10,000 balance, once that's done, you are debt-free. And that is a good feeling. I remember the day that I became debt-free, and it was really a nice feeling, and a feeling from which I've never gone back, because that is somewhere you do not want to return. So now you're completely debt-free, and you still have your cash flow engine. Remember, we still have $690 a month of cash flow engine that's available to us. Now, if you took that $690 per month and you were to back that into an investment at 8% interest even, that would be the equivalent of a $103,500 investment. So basically that little cash flow per month is worth $103,000 into your as an income producing asset. So that's really quite a bit of cash flow. So the next thing to do is to take that cash flow and to acquire income producing assets.